dear students. In this video tutorial we will be discussing about how to calculate gross annual value of a house property. We know that income from house property is the second head of income while calculating taxable income of an assessee. In that, the first step is calculating gross annual value. So we will discuss how to calculate gross annual value with one example. I have given a question: calculate gross annual value for the assessment year 2025-26. They have given couple of information. Municipal value 1,20,000, fair rental value 1,30,000, standard rental value 1,10,000, and actual rent they have given per month it is 10,500, and unrealized rent 10,500. Vacancy period is 1 month. So with this particular data, so we have to calculate the gross annual value of a house property. So we will start first. What we have to do, we have to compare the municipal value and fair rental value. In that, whichever is higher will be considered to the step number 2. The first step is we have to compare municipal value and fair rental value. Municipal value, it is nothing but it is the value given for the property by the municipal authorities in the locality, and fair rental value, it is nothing but the value of similar accommodation in the similar place. So this is the meaning given for that. So we have to consider these two values, and we have to consider whichever is high. So if look at this particular question, we can see that municipal value of the house property, it is 1,20,000, and we have to compare with the fair rental value. Fair rental value, it is given 1,30,000. So we have to compare both values, and whichever is higher, WEH, it's mentioned that whichever is higher we have to be considered. So in this 1,30,000 we are considering. So this will be the answer for the first step, okay, while calculating gross annual value. And after comparing these two values, we will be getting 1,30,000. That 1,30,000 we have to be considered for the second step. Second step, we will be comparing value under step 1. What is the answer which we derived from step number 1? We have to compare with the standard rental value. So we will be taking 1,30,000, and what is standard rental value? It is given in the question, that is 1,10,000. It is nothing but it is the value given by the rent control authority. So we will be considering standard rental value 1,10,000, and we have to compare this both values, 1,30,000 and 1,10,000. In this, whichever is less we should be considered as a answer for step number 2, and that answer should be considered for step number 3. So here the lesser value will be 1,10,000 we are considering for the further steps. So 1,10,000, that 1,10,000 we are taking to the next step. So that you can see that the next step we should compare value under step 2 and actual rent. So here we know that the answer from the second step, that will be 1,10,000. 1,10,000 we have to be compare with the actual rent. Actual rent, it is nothing but the rent received by the assessee or the landlord of the property. That is called it as actual rent. Whenever actual rent is mentioned, it's very important that so in this particular question, 10,500 will be the per month value. So most of the students, 10,500 multiplied by 12, whatever answer we are getting, they will be considered. But you should make sure that what the total rent, that is 10,500 multiplied by 12. So whatever answer you are getting from this answer, if unrealized the rent is given in the question, we should minus it. So most of the students, they are forgetting to minus unrealized rent. Unrealized rent, it is nothing but it is the rent not able to collect from the tenant. So that means the tenant is staying in the house, but we are not able to collect it from the tenant. So that amount will be called as unrealized rent. So whenever you are considering actual rental value, so from the total rent, you should minus if any rent not collected from the tenant. And another important thing you have to observe here, very important aspects, whenever you are looking at the question, you have to clearly check whether they have given actual rent or composite rent. So composite rent, it is nothing but it include a rental value plus other amenities for watchman and maintenance, lift maintenance, cleaning charges, everything should be included. Then we cannot be considered that as the actual rental value. That is called it as composite rent. So you are not supposed to consider composite rent. If in the question composite rent is given, so you have to eliminate all the amount which we collected for all the amenities. Okay, so we have to minus, and to stay in that particular house, what is the amount which we have collected should be considered here. So what we have to do, we have to actual rent here. We will be calculating 10,500 multiplied by 12. It is coming around 1,26,000. So 1,26,000 minus 10,500 you have to be taken. So I will just write the calculation over here. So we have 10,500 multiplied by 12. So you will be getting around 1,26,000. So from 1,26,000 you have to minus 1 month unrealized rent, 10,500. So if you are minusing, so you will be getting 1,15,500 you will be getting it. So this is the answer you are getting here. So while comparing here, we have to take whichever is high. So it will be 1,15,500 is the higher value will be considered. And after reach in this particular step, the next step what we have to do, we have to minus the vacancy allowance. Most of the students, they will be confused with the vacancy allowance and unrealized rent. Vacancy allowance means out of 12 months, maybe 1 month or 2 month or 3 month, that particular property not given for rent or nobody is staying over there. So for that it will be called it as vacancy allowance. But unrealized rent, the tenant is staying there, but we are could not able to collect the rent from the tenant. So there is a difference is there. So in this question, vacancy period 1 month is given. So 1 month rent we can minus over there. That will be 10,500 will be, yeah. So and what is the final answer, gross annual value? So from the top value we have to minus the vacancy allowance, and whatever answer we are getting, so that means it is coming around 1,05,000 rupees is the gross annual value of the house property. So this particular question we will be deals with how to calculate gross annual value, especially with the unrealized rent and vacancy allowances. It is not mandatory that all the question they will be given all the values, fair rental value, standard rental value, or municipal value. It is not mandatory to give that. If it is not given, so what you have to do, whatever value is given, that value have to be taken and you proceed to the next step. So I am expecting that student got a clarity to how to calculate gross annual value of a property. We will discuss more more advanced problems in the upcoming lessons. Thank you so much.